Hey, Dan Passarelli here. I was looking at a chart of the spiders, the broad market, the S&P 500, and it kind of begs the question, is this market setting up to head a little bit lower? So there's a couple of things. I mean, first of all, there's the tenet that tops take longer to form than bottoms, and we've had a pretty long run ever since the beginning of, October 15th from last expiration until now. We've had a really good run for about a good solid 3 weeks. The last couple of days we had some red candles. We did make an all-time high on Friday, but are we starting to soften up a little bit? And so one of the things that I was looking at, there's a number of things we can look at to help us understand the answer to this question, but one of them is implied volatility. So if you look at the implied volatility, which is the red line down here of the S&P 500 options, the spider options specifically, you'll see that back on October 21st, when the market was overall rising, the implied volatility rose also. Now that was when the market was making some all-time highs, which we've since gone through, but that's sort of a rare anomaly. We typically don't see the market rise with its implied volatility, and that's held pretty steadily since then. In fact, we have kind of met that same implied volatility level, if not touched just a little bit higher. Now, why does that matter? Well, people tend to buy options when they're nervous about the market falling. And implied volatility is a measure of the buying and selling of options. So what this means is that people are holding on to or even buying more of those options in this rising market. And so to me, that can only mean that people are looking for some protection for a hedge. They're not necessarily selling their stocks yet, but they are perhaps buying some puts to add some protection to the stocks and ETFs that they're holding. I hope this helps. This is Dan Passarelli, Trade Smart.